Andrew, so good to see you. We are getting back to basics today with RMD
Mhm.
101, the rules that catch retirees off guard. Required minimum distributions aren't just about taking money out, they come with specific IRS rules that affect how, when, and where those dollars can be used. Understanding these basics can help you avoid penalties, manage taxes, and even support your favorite charity. So, number one, each account is separate. The IRS requires you to calculate the RMD from each of your pre tax retirement accounts individually. How does this rule catch people off guard?
Yes, Aaron, and this is a tricky one, right? Because
Yes.
we have several IRAs that could be in place. We could have, 401ks or employer plans, and each of them have different rules we have to follow. There's a
Mhm.
certain percentage that the IRS is requiring us to pull out of these accounts for the required distribution, and we need to decide in the efficiency in the IRAs. Should we pull it from one? Should we aggregate this from all of them? Obviously, 401ks and other employer plans require us to go through and have that RMD deducted each year. So
Mhm.
it comes down to a strategy. And then it's not just for you, it's also for your spouse. How is that going to work? Because that's a totally separate ordeal.
Yeah, good point. I can see why that gets a little bit muddy. All right,
Mhm.
number two, you cannot use your required minimum distributions to directly contribute to a Roth IRA. Why is that?
Mhm. Yes, and this is a pain point for a lot of clients, right? Clients say, "Hey, I took the money out, I paid taxes on it. Why can't I put it into my Roth?"
Right.
Well, unfortunately, it needs to be earned income, right? Not passive income. So that's something that's big for our clients to understand. And in the proactive planning, we want to limit that exposure and have as much put into Roth as we can, right? So.
Mhm. On the other hand, using an RMD for other expenses is okay. Once the RMD is taken, the cash is yours to use however you wish. Does that include reinvesting it in a taxable account?
It most certainly does. So we can use it for whatever we would like, but it's important to realize that if we'd like to take the funds and reinvest, it is going to have to go into a taxable account or a brokerage account, as a lot of clients refer to it as. And, I hate to see it because I like to see efficiency. Efficiency is where proactively this can be put into a Roth account by doing Roth conversions.
Mhm.
But unfortunately, that's something that if we are at that point in time, we're going to have to just put it into the taxable account.
Right. We're going to revisit Roth conversions in a second, but I do want to hop into number four because it is my personal favorite. You can use required minimum distributions for charitable donations. Can you explain how this works?
Oh, absolutely, Aaron. QCDs, and it's a great tool to be able to utilize for our clients. So, if our clients, have a want to gift or are looking at strategies at lowering taxable income, doing qualified charitable distributions is a great opportunity. When we gift the RMD from the IRA to a charity, they are able to receive those qualified funds tax free, and then obviously the tax benefit goes to the individual that's gifting, right?
Yeah, such a big deal. The way I always explain it is if you're putting money in the collection plate, there's probably a more efficient way to do it with your taxes.
Absolutely.
All right. And last, I feel like this is probably known, but it bears repeating because it's so important. RMDs are taxable.
Oh, they sure are. And that is something that's so important to do proper planning on this,
Mhm.
because we just had a client into the office this last week that unfortunately, because they didn't proactively plan, they will spend a majority of their retirement at 37% tax bracket.
Ouch.
And that tough, the
Yeah,
penalty for being a great saver,
I
right?
know.
So, but when we look at this, there are strategies that we can put in place proactively, and we are proud to, be the with eMoney, the number one financial planning software in the country that allows us to model Roth conversions, where we pay the taxes up front, right? Pay the tax on the seed, so we could enjoy the harvest tax free and more money
Mhm.
tax free, not just for us, but really for whoever we would leave it to, whether it's leaving it to a spouse or non-spousal beneficiary. There are definitely advantages to getting that taken care of.
Right. No, it's clear talking this through. Something that I say is if your advisor is just talking about investments, you need a new advisor. Tax strategy has to be a part of your retirement plan. So, Andrew, if somebody wants to sit down with you, learn how to be more tax efficient with these RMDs, and again, proactive planning is key, what's the best way to reach you?
Most certainly. So I would tell them just to go right to our website at wagnerwealth.org. There will be our contact, office, our contact phone number for whatever office they're
Mhm.
looking to reach out to. And we most certainly will look forward to serving their family.
Great. Andrew, thank you.
Thank you.